Hey, what's going on, everyone? Vega here for SerpentX Tech. In this video, we'll be talking more or a little bit more in depth about the International Monetary Fund's report that they released on July 5th, 2023. Now, I did a short about it just to get some awareness out there and making sure that you guys take some time to go through this 35-page article. It does have a number of inaccurate statements, contradictory statements, and clearly no evidence for some of the numbers that they're providing, including the numbers that they believe that the taxes could obtain from various taxation methods. But I just wanted to go through it and look at it from the mining perspective, because the biggest concern to me is trying to use miners to report on miners, right? Trying to use miners to report on individuals using the blockchain, tracking certain entities, individuals, whatever it might be. As KYC becomes more prevalent, and in order for you to use certain exchanges, you got to do KYC. But as these wallets become attached to names, entities, individuals, corporations, institutions, whatever it might be, they want to know that information, and they want to know it for the tax purposes. So this report has, as I mentioned, some concerning elements to it. You can see the authors and editors here not attacking any individual or organization, just wanted to call out a few things. It does seem that they are educated somewhat, because they do know that transactions are traceable. They do know that they can use chain analysis to backtrack an individual or an entity. Not all cryptocurrencies allow you to do that, like privacy coins, which is why they're being pushed out. But they do have some education. It just feels like they don't know everything out there. And one of the biggest concerns for me, besides the fact that the Biden administration didn't get what they wanted with the 30% tax on crypto mining, is just an outline, right? And the IMF, we know, has a decent amount of sway over various governments or countries or entities out there. These are just kind of like, I'm just throwing it out there for theoretical, this is what you could do for taxation purposes type deal. Nothing is set in stone. But the concerning element is trying to incentivize miners. So I'm going to do my best to read some of this to you. If there's a legal or financial expert out there that wants to comment and add some additional clarity, please feel free to do so. I am still reading through this. I read it twice, but whether or not I understand it is a different thing, and I don't want to misrepresent anything. So bear with me here. They say here, in these respects, they are attractive points, because they were talking about how these two have an estimate around 55 to 60% controlled of the Bitcoin mining capacity at the end of 2022. So whoever has the most hash power or the most control over the Bitcoin network would be attractive to them, because they would basically be able to use them for information reporting and impose at that point some corrective transaction tax if determined to be helpful, and or applying a credible withholding obligation, a charge on each transaction paid to, accredited / refunded by to the relevant tax authority. So using these, probably placing some upstream elements along the way to track the transactions for reporting purposes, to track these entities, individuals, corporations, whatever they might be. They also go on to say that compliance with these obligations might be pursued in a number of ways. The traces that miners leave on the blockchain might be helpful to identify them as real entities, and or incentives might be found to encourage their compliance, if not in the form of some explicit subsidy to the complainant, the optics of which might not be good. Then in the familiar form of allowing some delay in remitting taxes withheld to authorities. So trying to incentivize individuals or miners, not individuals, not you and I, but probably the larger mining operations that hold a significant amount of XYZ hash rate for whatever blockchain they're trying to monitor, and having them provide this data or this upstream of information for tax purposes. And very concerning. I'm going to let Coin Bureau explain it to you real quick. I'm also going to have them linked down in the description, and then we'll wrap up, because I'm not trying to create FUD. I just want the miners to be educated.
The authors repeat that, quote, Miners, who do see every transaction in non-stable coins, might in principle be given a role in tax reporting/withholding consistent with the general principle of tax administration favouring collection, where possible, at a relatively small number of upstream points. The authors then shamefully admit that they couldn't estimate how much tax evasion occurs in crypto, nor how much this amounts to in fiat terms. That doesn't stop them from saying that the tax revenue from crypto could be as high as $300 billion per year if every penny is accounted for. The authors also remind the reader that most of crypto's wealth is held in a few hands. They say that the focus of this paper was about how to pry any ill-gotten gains from the hands of these crypto elites, but from what we could see, it was just an excuse to bash Bitcoin and justify more government control.
So to access this paper, I'm going to have the main link in the description, but when you go to this link, just click on free download. It's going to download a PDF and use whatever PDF reader you want to open it up. Not to mention, if this is implemented, and not saying it will be, that kind of takes away from crypto and the whole reason why Satoshi Nakamoto did what they did with Bitcoin, right? Trying to bank the unbanked, put the money into the hands of the individual or under the control of the individual rather than a centralized entity. But the governments are going to pry until they can get as much money as they can from various elements, whatever it might be, whether it be mining, DeFi, trading, derivatives, does not matter. They're going to do their best to get their tax. And while you and I, again, as I mentioned in a short, do not use cryptocurrency for nefarious purposes or criminal activity, that is the negative connotation of it. It's very harsh on the environment. It's very carbon intensive. Proof of work is not a good model. It's used only for criminal activities or to evade taxes or sanctions or pay for illicit activities. But you and I both know that we're just using crypto mining as a way to try to build financial wealth or freedom for our family and for our future. However, sound off in the comments down below. Check out the link in the description. And do me a favor on the way out. Hit the like button. Make sure to get subscribed. Hit the notification bell to stay up to date. As well as check out the additional links in the description to help support the channel and what we do here. And you just have yourself a wonderful day. Take care. I'll catch you next one.